Welcome back. Your morning movie this morning is Nvidia and Coreweave. Take a look at these stocks. Coreweave right now up almost 10%. Nvidia flat as Nvidia is deepening its bet on AI infrastructure with Coreweave, investing another $2 billion in Coreweave by purchasing Class A common stock worth $87.20 a share. The deal also marks Nvidia's first standalone CPU launch, a direct challenge to Intel and AMD, as the company pushes to power the next phase of AI growth. Markets this morning are mixed. Take a look. Investors are bracing for a heavy week of earnings while tracking developments around energy prices and global growth. The Dow Industrials are up 8 points, but the Nasdaq down 47. Natural gas prices have been surging, up 17% above $6 for the first time since 2022, as a massive winter storm is driving up demand for heating oil. Yields right now. Take a look at where yields are pulling back this morning. The Federal Reserve is kicking off its first meeting of the year tomorrow morning. Widely expected that the Fed will hold rates steady after 3 straight rate cuts. The yield on the 10-year now at 4.22%. Inflation remains above the Fed's target, even as the president has reined in inflation, and the job market is cooling. Lots of worry about AI efficiencies replacing jobs. Markets watching the Fed. Chair Jay Powell's comments, of course, around Fed independence, future rate cuts. We will get that on Wednesday as they wait for President Trump's decision on the next chairman of the Federal Reserve. Joining me now is MacroMavens President Stephanie Pomboy. Stephanie, great to see you. And I want to start with what you have been talking about for so long. You've been recommending that the audience buy hard assets, things like gold and silver. We're seeing another day of record highs for the price of gold. Gold surging past $5,100. $5,100 an ounce, driven by strong ETF inflows as well into gold. Central bank buying, rate cut expectations. How do you see the situation today for hard assets, including gold?
Well, thanks for having me. Yes, the backdrop for hard assets, I think, continues to be incredibly favorable. In fact, we haven't really seen a lot of what I view as the fundamental case for the precious metals, which is surprising. They start to move in anticipation of several macro events like expansionary monetary and fiscal policy or a kind of risk-off scenario. But you don't see a move this parabolic before you start to get traction on those themes. So it is really interesting. It's a little unnerving, I will confess, as someone who's been bullish. I didn't expect that we would get to this level this quickly. So I'm sure that we'll get spanked hard sometime soon. But again, I think the long-term, the bigger picture for the metals is very bullish. And I would say, just kind of on a little bit of a tangent, that what's happening in Japan is really playing a major role in what's happening here with the precious metals in terms of their out-of-control issue with JGB yields soaring. At the same time, their currency is depreciating, which is a very unusual dynamic to see rates going up and the currency weakening. And so it looks like the MOF is going to have to come in and intervene directly, which is, again, just more of this currency debasement theme that has been driving the precious metals for the last year.
Yes, silver also skyrocketing above $100 for the first time. Silver's at 109 right now. Scott Bessent, the Treasury Secretary, told us that some of this was Japan when I interviewed him last week on stage in Davos, and he was worried about all the spending and the policies there, sending yields, interest rates skyrocketing in Japan and spiking our rates as well. Stephanie, if I want to buy gold and I want to make sure that I have exposure, do I want to buy the metal, gold, or do I want to buy some ETFs? There are plenty of ETFs out there that have gold as well as gold mining. Do I want to buy an ETF that has gold as the metal as well as the miners in it? What do you think?
Well, the miners have been undervalued relative to the price of gold for a long time. They moved spectacularly last year, but they're still undervalued relative to the price of the bullion. And you can position that through the ETFs, like GDX, which is the basic gold miner index, and then there's a junior miners index as well, if you want to get a little more speculative. But I would caution people, these miners, they move very sharply in both directions. So if gold pulls back, I would expect the miners will get hit, in that pullback. So, again, I think the long-term picture is extremely favorable and continues to be bullish. But I am mindful that given the run we've seen so far, you're probably ripe for a pullback. As for gold ETFs for the bullion, you want to make sure that whatever ETF you own is actually redeemable in physical. Otherwise, you're not accomplishing anything. You're just owning another form of paper claim, which isn't really giving you anything. You want to make sure that the ETF is redeemable in physical, and there are a few ETFs that actually do that.
Ryan, we're getting the November durable goods out better than expected, up 5.3% versus an estimate of 4.5%. Again, more indications that this economy is growing, even as we are talking about all other issues which are consuming our conversation. The economy is doing quite well and expected to continue growing on the president's policies. Your reaction?
Yeah, no, 100%. I think what we're seeing here is the goods economy is actually coming back, because if you look at since the pandemic, it's really been services. As you remember, we all kind of had our revenge travel. Everyone was doing something that was service-oriented. But what you're starting to see, the Dow transports, which is the old Dow theory, are at an all-time record high, along with the Dow Industrial Average, which says manufacturers are up, but also the shippers are up, which says to me that the goods economy is starting to heat up. And I think that's one of the reasons why you're seeing GDP growth the last quarter tracking at 5.4%, which is just phenomenal.
Yeah, for sure. Stephanie, your thoughts on how sustainable this move is in terms of both hard assets and stocks going up at the same time?
Well, I think what's interesting is that we're in an environment where clearly policy is going to be run hot. You know, obviously we've got the tax refund season coming, so we're going to get sort of a de facto fiscal stimulus. At the same time, the pressure is mounting for the Fed to cut rates, and they're already re-expanding the balance sheet, even though they're not calling it QE, call it whatever you want. And so I think the bias is toward hotter inflation, which obviously is favorable for the precious metals. And in nominal terms, it will be supportive of stocks. However, you need to look at that relative to the depreciation of the currency. In real terms, as was the case last year, stocks will be losing value. So that's why I continue to pound the table on hard assets.
All right, we will leave it there. Great call, Stephanie. Good to see you. Stephanie Pomboy. Stay with us.
Thanks.
We'll be right back.